Sure. So last 15 minutes will be spent on the Q&A, where the questions will be displayed in your chat box, where you can, all of you can see the questions which are being posed for individual panel member or general.
Okay. If it is general, then I can actually request a particular panelist or two to respond to that question, right?
Sure. Now we are live and we are starting this session. So good afternoon. My name is Vikas Mohan. On behalf of CII, I welcome you all to the CII CFO Conclave. This is the fourth and last session for today. The theme for this panel discussion is how CFOs are playing on the front foot in tough times, sectoral experience sharing. It is my privilege to present to you an esteemed panel comprising of Mr. Khushru B. Panthaki, Senior Audit Partner with Walker Chandiok & Co. LLP. Khushru will be the moderator for this session. Mr. Jamin Bhatt, President and Group CFO, Kotak Mahindra Bank. Mr. Niranjan Gupta, CFO, Hero Motocorp. Mr. S. Vardharaj, CFO and Head, Finance Systems and Legal, Godrej Agrovet Limited. Mr. Debashish Nandi, President and Group CFO, Thomas Cook India Limited. And Mr. Vesh Goel, CFO, Dr. Lal Path Labs Limited. Thank you all for your time and for kindly agreeing to join today's panel. Before handing over to Khushru, I would also like to thank our partners to the conclave. I would like to sincerely thank our technical partner, Grant Thornton Bharat, co-partner, AJP and Partners, and associate partner, C2FO India, Kroll, a division of Duff and Phelps, Tata Consultancy Services, and Tata Power Company. One last announcement, and this is for the participants. We did in the previous sessions, we do plan to spend last 15 minutes for the Q&A. Please write your question in the Ask a Question box addressing to the panel member. Panel will then pick it up and answer your question as feasible and for time permitting. So with these words, I once again welcome you all to the last session with the CII CFO Conclave. And may I now invite Mr. Khushru B. Panthaki, Senior Audit Partner with Walker Chandiok, for his opening remarks and to moderate the session, please. Thank you. So you're on mute, please.
Yeah. Can you hear me now?
Yeah, that's okay. Yeah.
Thank you. So thank you, Vikas. Thank you for your introduction and appreciate the kind of perspective that you shared. Very good afternoon to all of you and to the panelists in particular. Indeed, an opportunity for us to sort of talk about the sectors and the concluding session of this particular conference. So thank you for the opportunity once again. If you look at this particular topic today, it talks about how the CFOs are playing on the front foot in tough times. And for a minute, when I actually think about the front foot, the first word that comes in my mind is, of course, the field of cricket. That when a player actually goes on the front foot in general, it means that he has actually been aware as to where the ball is going to land. And therefore, he, with a lot of confidence, he's going to hit that particular ball. Now, definitely the COVID times, when the bowling started in COVID times and the pandemic actually was bowling, nobody knew where the delivery is going to come. And a lot of people actually were thinking that it's going to be a backward betting. But trust me, having worked with many clients of ours on the audit side and having seen the industry and the sectors over the last 7 months or so, I must say that there is a lot of positivity. And at the same time, I have seen the CFOs actually batting on the front foot. So this is basically the theme of this particular session. And over the next or so, what we will be planning to do is we will be having some specific questions on the sector. And at the same time, the CFOs will be giving their experiences on this particular sector as well. Now, if you look at the economy, the way the economy was moving, definitely certain sectors, even prior to COVID, were performing extremely well and certain sectors were under a stress. However, disruption is something that has been experienced by the economy in the past, by the sectors in the past, and disruption is something that would create more and more opportunities and more learnings as well. So over the last 7-8 months, under this particular pandemic season, what we have seen is a lot of companies have taken up this particular pandemic as an opportunity to grow. And we have seen that there are certain sectors who have performed very well. But definitely, naturally, given some of the inherent risks and inherent reasons, some of the sectors would have not very done well. But at the same time, they have a lot of path being carved out as to how the future is going to be. So whenever we talk about difficulties, whenever we talk about situations which are difficult situations and disruptions, I personally want to think about opportunities as well. That what is it that we can optimize from this particular situation? And I'm very, very sure the CFOs and most of you who have been from the finance field over here would have thought through that what kind of opportunities will spring out from this particular situation. So with this, I would like to sort of, open up this particular panel discussion. And maybe I would request every CFO, starting with Jamin, in terms of the brief update about the impact of COVID-19. I'm sure in the earlier sessions, people would have spoken about COVID-19, but a very brief impact of COVID-19 specifically on the banking industry that Jamin and his team would have experienced in the past 6-7 months. Over to you, Jamin. Thank you.
Jamin, you're on mute, please.
I'm sorry. Thanks, Kushal. You talked earlier about going on the front foot. Today we can talk about going on the front foot. But when it happened in April, bear with me. I don't think anybody of us was clear about getting on the front foot. There was a scare, and clearly being in the industry which is lending and which is kind of heavily geared, you first wanted to make sure that you are fortifying yourself. So gear yourself to be possibly getting on the front foot at a later date. So one of the couple of things which we did very initially internally, and then I come to the sector, was the fact that we just about finished our budgeting process for the current year. It would happen in March. So one of the first things I did was to tell people in this uncertain times, don't chase your loan growth. Loan growth being uncertain, you're not out here to go out and lend money. We will review that at the end of the first quarter. So at this point of time, all loan budget targets are out. That is, don't chase them. The second thing which I was looking at is if you go to the borrowers, I was more comfortable with a borrower who had lesser leverage compared to somebody who had more leverage. And then when I looked at our own balance sheet, every bank to that extent, every lending institution is the most leveraged institution anyway. You can go up to a leverage of 9:1 or 10:1. So I said, it's time for us also to fortify ourselves. And despite the fact that we had far more than the regulatory requirement of capital, we were among the first companies to go out and raise capital. We said, forget the price, I just want to fortify myself. So by the end of May, thankfully working with the MCA to get approval of the shareholders to postal means and whatnot, by end of May, we had additional capital. So that was the first thing, as internally the analogy which we had put out was, we are in a storm. At the end of the storm, maybe we are in a ship, let's fortify the ship. All the ships around may not reach the other side of the shore. And some of the ships which may reach the other side of the shore may be so battered that they may be weakened. And at that point of time, if you are stronger, you will have a larger play of the market share when you're there. And let's fortify ourselves to that. And that's the reason where we said, maybe at this point of time, as things are opening up, unlocking is happening, we can talk about possibly being on the front foot. But at that point of time, it was important to fortify ourselves. And that's exactly what we did. And thereafter, of course, a series of steps. You've seen the regulator, which is the RBI, coming up with steps with respect to liquidity easing. The government of India came up with a lot of steps to make sure that particularly the small businesses were given reliefs. All of that has helped, and the unlocking has helped. So every month has been a question of seeing how it goes. And every passing month since April has been looking better and better. I do not think we are still there. But today, if I look at the scenario is far better than what it was the grim situation we looked at in April, though it has possibly lasted longer than the most optimistic scenario which people had in April. But I think one is living with that and things looking far brighter. But as we talk about it, yes, there would be stronger players and weaker players who are getting differentiated in most sectors. Should we on mute again?
Yeah, thank you, Jamin. I think sentence which really sort of and I'm aware of this, which really I really appreciate was of course the fact that yes, you were able to raise a significant amount of capital, and not just you, some financial institutions and banks, etc., have been able to raise capital during this particular pandemic, and this is something which initially one would have not thought of. It happened. It's great, Mr. Niranjan, we would like to now know a little bit about the impact on the auto sector, because auto sector did have an impact. And since you come from that sector, your perspective definitely would be much appreciated.
Right. Thanks, Mr. Khushru. I hope my voice is audible.
Yes, please.
Okay, fantastic. And firstly, good afternoon to everyone on the call. And I hope everyone is staying healthy and staying positive, not COVID positive, but otherwise positive. So let me just take your front foot analogy a little further, because I'm also a passionate fan of cricket, like many Indians. Yes, we need to be on the front foot, but equally, we shouldn't be predetermined on the shot that we will play. So while on the front foot, if we find that the delivery is not suiting, it's a bouncer, we should be prepared to duck. So I think should play on the front foot, but the game will be to adjust to the delivery and in very quick time. And by that, I mean a very quick decision making. Uh, the what has changed during COVID times for CFOs, and that's the experience I have and many of our colleagues that I've spoken to, is sheer speed of decision making. There's simply no time for analysis. It is about how do you ensure that you just take the decisions very fast, because every day has been changing right from the lockdown to now, right? Things have been coming, going, uncertainties haven't gone away. You need to capture the upside, but equally protect downsides. So, in many calls you have to take, and therefore, how do you break the hierarchy? And what we've been doing is look, typically a decision flows through hierarchy upwards. And you've said that, look, forget all that. You require any decision, get everyone in the room, whoever, from the ground, from the middle, from the top, whoever wants to contribute, get in the room. Good thing is the digital technology enables that. So get them on the platform, Zoom, Google Meet, whatever. Let everyone have a say. After that, 10 minutes discussion and then a decision. Simple. So, and of course, as CFOs and teams, somebody has to do a paperwork and backup documentation. But honestly, it is now decision which is first and documentation which is later. So that's a big change, because navigating through this crisis cannot be based on a static mind of decision making or on the typical way of analysis. So I would say that's one big change that we have seen and which we feel is good. From the coming from auto sector, uh, again, I think we in Hero and two-wheeler sector later, overall, we started playing front foot right from the unlock itself at the back, because we had two choices: either play on defense or play on front foot. And we found that if you play on defense, then it's going to be pretty prolonged, because anyway the damage was done. So if you play on front foot, fine, so be it, right? I mean, you can't go worse than where you were. And with that thinking, we just did very rapid restart, and that has helped. If you look at, we achieved the pre-COVID sales in July itself, quarter two. Most of the two-wheeler companies have declared good results, either profit same or a growth in profits, bottom line. So I think overall playing on the front foot has helped. The other thing I would say is that the learning in this also has been, I agree with Jamin about boosting your liquidity. So while we did not borrow, but we did boost our liquidity by ensuring that there are incentives for collection from dealers, working capital management. In fact, in quarter two, we exited with highest ever liquidity that we had. So in that way, again, fortifying is what Jamin said, and that will remain the mantra. Few other things apart from this is, earlier for CFOs, it was about managing your own balance sheet. Now, I think if you have to be successful, it has to be not just your own balance sheet. You have to have an eye on the balance sheet of your ecosystem. Because if any of the fragile part of it falls, then you cannot survive. And therefore, that's very important, whether it's a front end or the back end. That's a big change that I see as CFOs we are making and we have to make. Uh, the other is, the cost cutting. The intuitive feeling is, okay, COVID, go into cost cutting mode. But you can't cut your way to growth, right? I mean, you can cut the fat, but you can't cut the muscles and the bones. And that's where the trade off and balancing is extremely delicate and extremely important for CFOs to keep investing behind growth while ensuring the optimization. Um, And then the other thing is, while short term is extremely important, because obviously if you don't cross this bridge, then the question of long term does not arise. Equally, one can't take the eye off the long term, because otherwise, after a year, one will figure out that you are late, yeah, into doing what you were ought to do or supposed to do. And again, one of the examples how we as a company have navigated both short term and long term is, in even in this crisis, we've been able to then do a Hero Harley partnership, which has been navigated along through this, which is more a long term benefit. And so I think broadly those are my thoughts in terms of navigating through this crisis. Again, back to some of the back to basics also. Sometimes we forget about golden ratios, the debt equity, the debt EBITDA, the interest servicing, the current ratios. All of us are taught when we do our education, and then initially we carry that, and thereafter in the pursuit of growth we all give those up. And these times then call for you have to fall back on those golden ratios and start respecting them more. So I think as a community of CFOs, as intellectuals, as CAs, as whatever, within CII or the institute, we need to, I think, propagate these ratios far more, because these ratios actually need to be respected a lot more than they have been respected in recent times or in good times. So I think those would be my initial thoughts, Mr. Kushru, on this topic.
No, thank you, Niranjan. Truly appreciate. I think the sentence in your sort of download was exactly the fact that you mentioned that it's not just the balance sheet of the company, but the balance sheet of the ecosystem, and specifically the sector from which you come depends a lot on the ecosystem, on the ancillaries, and the performance and the sort of sustainability of the ancillary system, which is a very, very valid point. So thank you for that. Mr. Madhuravan, actually, giving you this particular request to share the perspective, let me put this theme that in this entire 7-8 months, what I have seen is that the FMCG industry, the poultry industry from where you come in, has done extremely well. I have seen people eating more. I would say the consumption is much more compared to what it has been. And there is a lot of demand, etc. So maybe specifically, you would like to share your perspective that how you felt before COVID and how you felt during COVID. And of course, how do you see the way forward on this?
Sure. Thanks a lot, Kushru. I think from Godrej Agrovet perspective, as you rightly mentioned, we are into different verticals, and the impact has been significantly different for each of the verticals. Couple of years back at CII, we had a session on CFOs in the VUCA world. And, this is the time where, everything sort of was so uncertain and so ambiguous. It called for different kind of measures. The first few months, I think February and March, to be more specific, was extremely bad for one of our business, and that was the poultry business which you talked about. Poultry is typically the first victim of any such kind of a outbreak of epidemic. And there are rumors that COVID is sort of spread through poultry, etc., which are, and as rumors, absolutely unsubstantiated and completely untrue. And so the government also had to step in and get in sort of clarifications that poultry in no way is sort of linked to COVID. But the damage had already been done. I think between February and March, the poultry industry lost around 20,000 crores. The poultry meat consumption during this time came down by almost 80%. The prices, which were at around 105 rupees per kg in January, fell to almost 5 rupees and 10 rupees per kg, while the cost of production of a poultry bird was around 85 rupees per kg. So, which meant that each of the players in this industry sort of lost heavily. And unlike a typical manufacturing entity, poultry is not an on-off kind of mechanism, where if the margins are eroded so heavily, you can just off and stop production. these are living beings, right? In that sense, so it takes time. It has its own. So any poultry bird has requires 45 days for it to sort of, come to its stage when it can be processed and sold. So I think it impacted the business and the industry very heavily. Fortunately, from April onwards, thanks to the various clarifications given, the poultry demand started picking up. But now the supply was a problem because people have, after losing so heavily, had to curtail the supplies, the placements, and then we had the other problem where supply was constrained and demand was started picking up. So that's on the poultry side. And as you rightly said, within poultry business, we also operate in the ready-to-cook segment. And we saw this pandemic giving birth to a lot of experimental chefs at our own respective residences. So all of us wanted to try something new, and the Emmy's range of products were very, very handy in that sense for experimental chefs like me. And we saw a good demand pick up for those kind of products. And that's what sort of helped us the Emmy's business. Apart from that, in our animal feed business, we saw, because of the lower placements, the feed requirement coming down. That's something which sort of impacted the animal feeds business. But now it's up and running. In fact, one of the things which helped us was most of our products are part of the essential goods. And in that sense, our business sort of was able to operate through this pandemic. By 10th of April, almost 50 of our 62 plants were up and running. And by 20th of April, all the plants were up and running. So in that sense, we are slightly better off from an operation perspective, but for the business impact which was there in the initial phase. Yeah.
Thank you, Vadraj. And I completely agree with you that, the last 2 weeks of March and the first couple of weeks of April, a lot of people were thinking as to whether it's safe to consume poultry. But with announcements made by the government and the kind of trust and confidence that was imposed into the system, I think the consumption did pick up. So thank you for the download. We appreciate. Now we are actually flipping on to a very different industry, which is travel and tourism, which was significantly impacted on account of COVID. The flights were suspended, the travels were not happening, the trains were not working, and the hotels were closed. And I think this particular industry would have taken a severe beating and must be thinking of rejuvenating itself. So, I request Debashish to give a little update about what kind of difficult times this industry has gone through in terms of COVID-19 impact, and how do you see the way forward?
Thank you, Subbu, and good afternoon to all the participants and the people who are listening in. So the impact of COVID-19 was absolutely devastating. It was like being hit by a tsunami while you're standing on the beach. The industry came to a complete halt. The pandemic had a paralyzing impact on the industry, and it took us some time to understand what really hit us. Because while most of the industries lost revenue, in case of the travel and tourism industry, our revenue stopped totally. Suddenly you go from whatever revenue you're earning to a complete zero. Now, and the other thing that was there is that none of us could imagine or could understand how long this situation will continue. Initially we all thought that it would last for a couple of months. There are theories about the Indian summer, or sort of taking care of the virus, etc. All of which proved to be wrong. And the impact is actually continuing even now. Obviously to a lesser extent, but the impact is continuing even today. So it was a period of a lot of thinking for us, a lot of strategizing for us. We actually focused on three things. The first thing that we focused is on managing our cash. Cash flow is important to us. It's always been a motto of the group, and that's not only in Thomas Cook, but even in our parent group, which is CFO. So managing the liquidity was important to us. So while we did not go for fresh issuance of shares, etc., at that point of time, but we did manage to draw down debt and to stay liquid, and because we knew that this is going to last longer than one had thought. The second thing that we did was managing our cost, optimize the cost. We took this opportunity to do something which we have been thinking for some time. We have, Thomas Cook has multiple companies, like a conglomerate of companies in India. For example, we have two parallel brands, Thomas Cook and SODC. SODC is 100% owned by Thomas Cook. But we have kept the two brands separate, the two companies, legal entities separate, sort of fostering some internal competition. And so what we started doing is restructuring this so that outwardly we will still have two brands. We still do have two brands, but at the organizational level, we have integrated the two organizations. We went through a fairly severe round of cost optimization, all usual things. I'm sure all the CFOs have done this, renegotiating all the suppliers, including on rentals, on office supplies, and anything that's there. Working on how to do more with lesser amount of cost. We did all of that. We set ourselves, since I'm a CFO, let's put some numbers to it. So we set ourselves a target of reducing our costs by 50%, and that's not only across India, but even the units that are there across the rest of the world. So we said in the month of May or month of April, I think, that for FY21 we set ourselves a cost target of 50% cost cutting. And to be honest, this was, most people did not believe us, including the analysts and, rating organizations and things like that. But I'm happy to report that it's 2 quarters now. The official results for second quarter yet to be out. But I can say that we are actually exceeding the target. In the 6 months that we have seen, while the target was about 50% across the group, we have actually, running at a 53% cost saving across the group. Obviously, that meant a lot of sacrifices that have been made by the employees as well. The third thing that we did was, the two things that I've talked about is more about surviving, right? It's about how to manage in tough times. The third thing that we talked about is more futuristic. So, what we call reimagine. We realized that the business dynamics will change completely as far as travel is concerned. We have two main verticals. One is foreign exchange, and the other is travel. And foreign exchange, to a large extent, is linked to travel, obviously. So we realize that the world of travel will, undergo a severe change. And this is not just changing the booking from a brick and mortar booking to an online. That's not the only thing. But there are many other parts to it. So one of the first things that we did was, while we had two lines of the two ways in which we did business. One was online, obviously, then the other was offline, which is done through our own branches as well as through travel agents or franchisees. And they use different channels for accessing customers or servicing customers. We made it a omni-channel. So use time to invest in technology. It took a couple of months to do that, but now we have, I'm proud to say that we are now omni-channel company. We have both offline and online. Is access to the same set of software, it's the same set of products. Earlier it used to be a little different. So that's one. But the other bigger thing is about reimagining how customers who travel after all this gets over. We didn't know when it will get over. Okay, but we realized that a lot of things will change. Let me just give you an example. The mainstay of overseas travel and outbound travel as we call it, is the group travel. I'm sure all of you have done this at some point of time in your life. You travel in a coach with 30 other people or 30 or 40 other people, move from city to city, hotel to hotel. You develop friendships with some of them, and not so deep friendships with others. But travel in a group is something that the industry so as 60% of our volume, of our outbound volume actually comes from food court. We realize that this is going to be a thing of the past because we can't trust the person standing next to you. How can you trust 30 other people sitting and sharing the same air-conditioned coach? So we realize that the future, the travel of the future would be more individual-based. It could be still be groups, but small groups with family and friends, people who can trust. So we launched what we call the van tour. So you travel in a van, you're picked up in a van from the airport, you travel in a van. It's like a bubble of your own, and move from one place to another, and you are dropped back to the airport in the same van. So you know that you are safe. The hotel, that's one thing that we did. We tied up with Apollo Hospital to advise us and take care of the safety aspect, because we realized the passenger would be extremely cautious about the safety of his health and safety. So Apollo advises us on for each and every tour as the choice of the hotel, because they also they also take a understand what the hotel is doing in terms of sanitation, cleanliness, etc. They take care of they also advise on the cleaning of the vehicles, what are the precautions we should take at each step. So the health and safety of each passenger, none of the passengers are not compromised. So, and we also started looking at the destinations as we moved away, and this has paid off or started paying off already. We moved away from city tours, to places which are where we can maintain social distance. For example, we have done this in domestic tours, and in the domestic market, the most popular destination today, one of the most popular destinations today is Andaman. Because Andaman is obviously, so you can understand, it's a remote place, and therefore you don't have too much of crowd. It's proving to be a great draw. It's for the same reason on an outbound side. I can draw an example from Maldives, where your resort is the destination. So once you reach the destination, you don't travel anywhere. You are in your own bubble. As long as the hotel is safe, the staff in the hotel is safe, you are also assured of your safety. So we started speaking. There are many more things, and I don't want to take too much of time.
But no, thank you.
Yeah.
Thank you. Thank you.
Yeah, like that. That's what we have done. Thank you.
Thank you, Debashish. In fact, you gave a very good download in terms of rebuilding that particular confidence of the society and the people that the travel has started. It is safe to travel. Of course, the group travel will not be there, but it is safe to travel. And of course, I think my experience as well, I have been traveling over the last couple of months, and yes, if you pick the right hotels and if you observe good amount of hygiene, etc., at your own level, it's possible to travel. So thank you for that update, and I'm confident as much as you are that this particular industry is going to pick up significantly over a period of time once the modes of travel, etc., will also be opened up. Now, coming to the next one, which is, of course, a healthcare industry, which has also seen a good amount of increase in its top line, in its turnover, in its business, etc. Not just because of the pandemic, but people have also started to become more health conscious, and the fact that there is a fear factor also, that if something is going wrong, what is it? Is it COVID or is it something else? Well, we have Ved Jain over here, and Ved, over to you in terms of how you are seeing at times during the COVID. I know that every particular company in this industry has worked very hard, very tirelessly, whether it is doctors, nurses, representatives. And how do you see it panning out over the next few months as well? Over to you, Ved. Thank you.
Thank you, Kushru, and good afternoon, everyone. I'm taking from what you started with, where this industry is always on the front foot, especially the diagnostic industry within healthcare, because for testing or so many other, COVID-related testing. So honestly, initially we also got impacted, but relatively we were less impacted. And if you see, our non-COVID business was impacted very hard initially in few months, but gradually it has recovered very sharp. And I can tell you that right now we are back to normals in terms of our non-COVID business. See, the important thing during COVID was, this demand was always there. I think service side, it was a constraint. But having said that, being the largest in this industry, we always, since beginning was trying to open our all centers and labs. So we were ensuring that the service side or the supply side is available so that people should not feel that there is a constraint on that companies are not servicing. Being this in healthcare, you always have three kinds of requirement. One is, very, very critical cases where you can't even defer or you can't avoid. So you need immediate testing on which, based on those testing, doctors are taking some critical decisions and doing some treatment. Second is non-communicable disease, which is we call NCD, where if you are a diabetic, you can still hold or defer your testing for some time, but even you can't avoid that. But that third piece, which is preventive or wellness, which of course you can defer, you can avoid as per your convenience. During COVID, what we have seen, the more impact because of lockdown, because we have 70% business which is walk-in business. People used to come to our centers, labs, but due to lockdown, they are not able to walk in from out of their home. And that's where we have quickly pivoted our model where instead of they coming to us, we have created a scenario where we are reaching to them, whether it is through home collection, whether providing some doorstep services, contactless services, be it while you can book online, pay online, take your report online, and so on and so forth. So it is during COVID, what we have seen because of lockdown, it was, logistic is a big piece, which is very, very important, which is backbone of our industry. In fact, for us, because we have hub and spoke model. So bringing sample from far flung, it was challenging, but honestly, we have, come up very sharply from this crisis, and now we are back to normal as far as non-COVID business is concerned. Come to COVID, we were among the first one who got the permission for doing COVID, and we being largest in this industry, we done lot of COVID testing. Initially, we got approval for one lab, which is in Delhi. Now we extended to 3 facilities. Now, during COVID, we have opened as many as 6 new facilities, COVID testing facility, and this is not smaller because we have to set up a very big molecular department. There are requirements from everywhere. You have to take the approvals from the agencies, from ICMR. You have to coordinate with some regulatories, and there are a lot of approvals. Licensing is required, and that's where even in the crisis we are able to some few centers, and that's where we always been on front foot. We never seen that what will be impact on our P&L and so on and so forth. But let's not change our strategy, and we have never changed our long-term goals strategy while investing in the business. There were two things which was happening. One was we have learned that this business can be run digitally, sitting remote, because earlier you need a doctor who is looking at prescribing some test. Now what is a good part where government has allowed is you can sitting at home can prescribe, consult on Zoom or Team or whatever channel. You need not physically visit to the doctors, and that's where we have encouraged to the whole community, including doctors, hospitals, because we have seen this. So we have take along, because we are dependent on that. If there is no OPD, there is no testing, there is no treatment, of course there is no nothing which is happening for us. So we have taken them along, encouraged them to open their facility, start writing, or treating the patients. So that's where the whole ecosystem we have created, so that now more and more OPDs are happening, more and more hospitals are now started, even elective surgeries has now started. So that was the journey. Now, after COVID, what I have seen, the good part is now, which you, Kushru, was mentioning, that people are now more conscious, more aware about the healthcare. Earlier, health was a bit of a secondary. Everybody was running something for no other thing, but not for the health. Now, I think during COVID, I have seen people are more aware. They are going for more testing. Even non-COVID testing has gone up because everybody wants to do testing. Second thing which I have seen and which will help player like us, because now people are more aware and more conscious of the quality and the hygiene. So people like us who are organized player, people always prefer to go to a branded player like us, because they are fearing if they go to a smaller player, there may be chances of getting infection, or they are not very comfortable with the quality. So that is another thing which is happening for the industry like us, where people are more conscious about the quality and overall hygiene. So preference has changed from unorganized to organized players. And the third thing, which is all good, where the government itself is created so much infrastructure for themselves. Earlier they were outsourcing tests to us. Now we are not getting even very minimal testing. It was a some overlap demand which coming to us, but now they have created, each state has invested hugely, and they're also spending a large amount of money on healthcare. So that is also in a society as a overall where it will benefit the people of the
Sure.
India. So that's something I think my
No,
experience.
that's a very good download, and I think I must relate to one point that since you mentioned about the awareness and the self-discipline, people have also become extremely reactive. So if you have a running nose or if somebody sneezes in the elevator, very honestly, instead of saying bless you give them a stare and you get scared. So people are becoming reactive. But you are right, actually, that this industry has worked tirelessly, and I really salute, like others, the soldiers who have really worked hard during the day, risking their own life, going from home to home, getting the tests done, including the COVID tests done at some points of time. So, I mean, this is commendable.
I think this is something this is like I'm going office daily from 15th May onwards. And why? Because I can work digitally from home. But this is for people who are working on the ground. And let me tell you, it's a very tough and to motivate them, because they every day
Absolutely.
to the every risk by taking this COVID, non-COVID.
No, of course, it inspires your team and your people. So great to know that. So thank you for that download. Let me come now specifically to the banking industry. I work very closely with the banking industry. We have Jamin over here, and Jamin, maybe it will be good for you to share the kind of sudden times that came up during the months of April, May, where the moratoriums were announced. And of course, there was a moratorium 1 and there is a moratorium 2. And the moment it is announced, there is a deferment in the repayment period, there is a deferment, and there is lack of clarity in terms of interest on interest, and many, many other things which the industry has gone through. How did this particular industry cope up, given the fact that at some point of time they were thinking that will there be a moratorium 3 as well? So maybe your perspectives on that would be appreciated.
Okay, so one couple of things there. One is, when the moratoriums were announced, even before that, it was pretty clear that the overall borrowing community is going to go through some stress. It is not life as normal. So internally, what we had done first was recognizing that loan growth will be slower as we go forward. We will not, at a time when your nominal GDP is being projected as being negative, one is not really talking about loan growth, because your loan growth is linked to what's happening in the economy. And when the loan growth was expected to be much slower than what was there in the previous year, as internal teams, what is it that you will do to make sure that you make risk-adjusted returns? And one of the things which we have done initially, and which has played very well over the last 6 months, is to increase the size of what we do on the treasury book, and playing safer games, but at least making sure that you continue to make spreads out of it. And if I look at my balance sheet in March, for example, about 70 odd percent of my earning assets would have come from advances. If I look at September, that 70% has dropped down to somewhere around 56, 57. So you increase the component of non-advances, which was safer, but which was giving you better risk-adjusted return. So from a pure finance point of view, you wanted to make sure that you did not impact the bottom line and it continued, taking a lesser risk there. So that was one. As things started talking about, moratoriums coming in, the first moratorium actually got announced as early as 27th of March. But there was complete lack of clarity. There were clarifications coming in, RBI stepping in, IBA stepping in, and all of that. So total uncertainty about what will happen, how long will this play out, and whether it is moratorium one, moratorium two, the Supreme Court, the now what's called the ex gratia interest, the restructuring announcement. It has led to some amount of confusion with respect to how it happens. But as prudent internal people, what you would do is find out whether the borrower is in genuine need of relief coming from the COVID impact. And if there is genuine need and your judgment belief is that here is it somebody who with some relief, whether it is elongation of the time, whether it is some relief on the interest rate, you're giving him some period of moratorium to pay back, whether any of that would enable him to get back on track and do that, fine. I mean, we would be more than happy to help out. But if there was another bit that, let us push the problem to a later date and wish and pray and hope that things will get back, you're only pushing back the problem and it's going to hit you at some point of time. So it was very important to distinguish between what was in category one and category two. Category one certainly going to help out. And things were uncertain. It played out over a period of time. In moratorium one, which started in April, you had a lot of borrowers who everybody wanted to preserve liquidity. So even if I did not feel the need, a lot of borrowers came around and said, give me the moratorium more because I don't know what this uncertainty will last, how long it will be there. So let me kind of get more liquidity for myself. In fact, we had a number of borrowers who were having the cash credit limits who the moment this was there, they tanked up on the cash credit limit to make sure that bankers don't use the power that they have to freeze limits at some point. So there was a rush for getting liquidity much more in the months of April and May, where people used the moratorium facility and pushed back their repayment. But as things started getting opened up, when it came to June, the numbers came down significantly. And lots of people who had opted for moratorium one said that, look, I'm comfortable. One, they also recognized that initially the belief was it was moratorium amounted to a waiver of payment for that 3-month period. But more and more they recognized it was not a waiver, but only a deferment. Moratorium 2 did see a lot lesser people wanting to get into moratorium 2. In fact, across the industry, numbers would be less than half. And as we stepped up, we've talked about restructuring, which is now got announced. And as most banks, it's still early days. People have time till December to get into restructuring and whatnot. But what one is talking about across the industry again is the number of people who are still opting in for the new restructuring thing is still going to be minuscule. So it may go up in the next 2 months, but at this stage it is looking like that. So people are more and more getting used to being able to live with this. And a lot of the panelists here talked about cost cutting. Uh, that actually has had a lot of revenues have fallen. In most industries, revenues have fallen. I mean, there be some exceptions like wage industry or whatever, but a lot of industries where revenues have fallen. But the impact on the bottom line is not as bad as the fall in the revenues. Because a lot of that has been cushioned by some amount of operational efficiency coming from cost cutting, coming from operations issues and whatnot. So in effect, even the industry is getting living with how to cope up with this. And one of the biggest benefits we would get as we go forward is if we could live with some of these efficiencies, even when things get to what one hopes to be a normal at some point of time. I think that is something which will help everybody in going forward. So the moratorium bit has been playing out as the COVID situation has played out, and I think it's getting more and more clearer now. And of course, the benefit which came along with it was the biggest one I thought was the government of India giving the MSME benefit, which effectively was a direct benefit going to the small industries to say, whatever you have a loan as of 29th of February, 20% of that can be given extra, and the government of India will in effect stand guarantee for you. That's a big booster. But again, if you look at it, the initial estimates of the government was that about 3 lakh crores will be taken up through this. And as we speak, only about two-thirds of that has got taken up. So even the MSME, we've had borrowers who are saying, why do I need a 4-year loan? Again, it's coming at a cost. So there also people have been choosy in terms of going in for that amount. But all of these steps have actually helped to come out of what otherwise would have been a bad situation and been better. And as things have opened up again, more and more comfort both among the lenders and the borrowers to see how that goes.
Thank you, Jamin. I think that was a very good download in terms of the entire experience of the lender over the last 6-7 months. And absolutely, you rightly said that the concentration, as far as your bank is concerned, came more on the treasury side, which really resulted into better numbers in terms of higher numbers of growth on the treasury side, and of course, fantastic results as well for the half year September 2020. Let me flip the question a little bit as far as the auto industry is concerned to Niranjan. Niranjan, on the other side, as you are a borrower and in an industry which definitely has seen ups and downs over many, many years globally and in India, it definitely restricts the ability of growth given the fact that borrowings could be a challenge and at the same time the demand. And now, of course, you are into a season of Diwali, etc., where the demand will be there. It also restricts the ability of, I believe, of this particular industry to make investments because you need significant amount of cash available for investments. Although the valuations could be very attractive to acquire and have an M&A endeavors. So what has been the experience in the last 6-7 months from a financial liquidity standpoint in terms of sources of funds and application of funds where your industry is concerned?
Right, Kushru. So firstly, I want to clarify, we are not borrowers. We are actually debt-free in terms of our balance sheet. And we have...
I'm saying more from an industry perspective.
I'm coming to that. So as far as Hero is concerned and most of the OEMs are concerned, the OEMs are cash rich. We've got, for instance, Hero's got 14,000 crores as its reserves and 10,000 crores in liquidity. And similarly, other players, OEMs, which are there. The issue happens on the front end and the back end. So if you look at the front end, that is the dealer ecosystem, and large number of dealers who invest in inventories and stocks, and obviously they have expenses to pay off, and that's where the system, and then the vendor system, and I'll talk about those. So as far as dealers is concerned, what we did as an industry also, and especially us, we actually cut down on the inventories to be held by them. So they are supposed to, let's say, have a norm of, let's say, 100. Yeah. You cut down that to 100 to 75 or a 60, you automatically release that liquidity. Yeah. To the extent of 25 to 30%. So almost, I would say, 30 to 40% of that investment was unlocked and released. Right. Because then that means that you operate on a more tighter logistics and supply chain system. But basically, inventories are there to safeguard against the risk of disruptions. Now, when liquidity itself is disrupted, then obviously you cannot lock that liquidity into inventories. So I think that's one step that was taken, which has helped the dealer system. And in fact, for all the sales that we have been doing to the dealers, we've been receiving 100% of the collections on time. So therefore, I could say that as far as dealer system is concerned, is reducing the liquidity locked into their inventories by us and by the other OEMs. That has been one big movement that has led to easing out the stuff on the dealer side. Plus, of course, we took steps to increase dealer margin, dealer profitability, supported them through part of their expenses during lockdown, all that we did. So that takes care of the dealer system. The other big is the vendor system, which is the suppliers to us, the tier 1, tier 2, tier 3. And a lot of them do have, some of them are good, there are suppliers like Bosch, there are suppliers like Siemens, all those big suppliers, then so they are good. But there are other suppliers whose balance sheets are more leveraged. Yeah. And that is where the issue lies. And that is where the issue lies that on one hand, the financing system is looking for, as we heard, and rightly so, they are looking for borrowers which are less leveraged, borrowers who have robust balance sheets. But the point is, it's more like, I could be controversial here, but it's more like, let's say you offer food to someone who's not hungry, and then starve someone who's actually hungry. I do understand everyone has to plug their own balance sheet and holes as well. And that is where I think the entire system needs to take note, because what happens is, if someone requires, let's say, a 10% or a 20% top on liquidity to keep going, if that liquidity is not provided, then the risk is that the whole balance sheet goes down. Yeah. So I think that's the pragmatic view that I see has been missing as a total financing system, whether it's banking or NBFCs or the others. I don't fault them on one hand, because everybody is trying to repair their own balance sheet, and therefore to have this kind of discussion requires first your own fortification. But I think that's a very important part, because then your entire debt which you have lent goes down the tube, and the whole system, economic system itself, gets dampened. So I think those calls are very important, and we've been seeing that those have been missing. That how, for a otherwise reasonably good supplier or a reasonably good business, where there is a customer, where there's an underlying business, then can we top it up, yeah, and then ensure that the wheels start moving, rather than deprive the additional loan because they are leveraged, and then it starts crumbling down. So I think that's something that I would urge the system to look at. What we are doing, Khushru, is to, from our side, to support in whichever way, working capital advance, bill discounting, all that, to the back-end ecosystem in the meantime.
Yeah, thank you. So I think the good learning out here is that in this particular scenario, the importance of reducing the stock levels and the inventory levels, etc., the dealers would definitely have low stress on the working capital requirements, which definitely goes well, and therefore releases cash to some extent, which is good to know. Varadaraj, coming to you, your industry recently would have witnessed quite a few things, including the impact of the farmers' bills, farm bills, etc. And that is definitely the way forward in terms of what the stakeholders will expect in terms of good results, the boosting up of the economy, etc. Now, what has been the impact of these farm bills on your specific industry? It will be good to note that.
Sure. Thanks a lot, Khushru. So the new farm bills which were passed in the parliament, as per Professor Ashok Gulati, who is a leading agricultural economist, he says that these new farm bills are like the 1991 moment for Indian agriculture, and are extremely critical for the agri sector. So just to sort of touch upon some of these key features of these bills, the first bill is the Essential Commodities Amendment Bill 2020, wherein foodstuffs including cereals, edible oil, oilseeds, pulses, onions, and potato are deregulated, which means the stock limits which were there have now been sort of removed, and the stock limits will operate only under exceptional circumstances. Now, what it does is that it enables merchants to purchase produce in large quantities directly from farmers. It encourages private sector participation in warehousing, cold storage, food processing industries, and it improves flow of commodities from surplus area to markets with higher demand. It also reduces the post-harvest loss and wastages for farmers. So that's one key sort of impact from that particular bill. The second bill is the Farmers Produce Trade and Commerce Promotion and Facilitation Bill 2020. This allows free purchase of agricultural produce and removes all barriers to intra and interstate trade. Also, it introduces a framework for e-trading. Now, this again sort of connects the farmers directly with the buyers, and thereby reducing the layers of middlemen. It enables better market and price discovery. Farmer enjoys higher income from sale of their agri products, and it also ensures more participation from private sector. This is one of the ways by which it paves the way for creating one India and one agricultural market. which is again a very, I should say, critical step towards ensuring removing the trade barriers. And the third bill is the Farmers Empowerment and Protection Agreement of Price Assurance and Farm Service Bill 2020. This is basically to providing a farm framework for contract farming, and this will again help the private sector in a big way to sort of enter into contract farming with farmers. It will improve the backward and forward linkages. It transfer risk of market unpredictability from farmers to the sponsors, and it also increases farmer income by eliminating the intermediaries. Okay. So these are some of the key sort of impacts of all these three bills, and to my mind, all these three bills are very critical from the future of the agri sector, from the future of the private sector's participation in the agricultural sector, and it will go a long way in times to come.
No, absolutely. I think I can completely relate to what you mentioned, and specifically your statement on One India, One Agricultural Partnership.
Correct.
And that these three bills, when integrated and implemented in the best possible manner, can lead to a better ecosystem and build up a better economy. So I think thank you for that particular feedback. Really appreciate it. Debashish, coming to you, and since now we only have about 10 to 12 minutes over the next and we have a few questions to cover. Maybe in a minute or a couple of minutes from your side, it will be very important for us to be aware that what kind of support and what kind of reforms you would expect from the government as far as your travel and tourism industry is concerned to really bounce back in a very big manner, because it has really seen a lot of depression in the last 6 months or so. And definitely there will be a lot of expectations, whether from a tax standpoint or whether any SOPs, etc. So it would be good to understand what is it that this particular industry is looking forward to from the government and from the ecosystem as well.
Thank you, Kushal. The travel and tourism sector accounts for about 10% of the employment in the country, directly and indirectly. Unfortunately, I have to say this, but the government is yet to take, in the last 7 months, the government is yet to take any positive measures that will work for this sector. We have all been hearing about various things that are being contemplated, but I have not seen a single instance of anything happening, in terms of giving any stop. In fact, even the benefits that were there are being held back right now. So, for example, let me give you one example to say that focus on that. We have a CII scheme, Service Export from India scheme, and tourism, inbound tourism that we earn foreign exchange qualifies under that. Now, one needs to apply, and then in 3 months' time you get the benefit. The government has not yet opened the window or the portal for applying for the year 1920, and it's been 7 months since the end of the year. So the industry has been crying for, because that would mean cash, and that would mean some immediate benefits, but the government hasn't been. It's just been dilly-dallying. There will be no clear response from the government on this. The industry expects a lot from the government. The industry expects that the government would come out with some definite steps in terms of providing support, in terms of providing easier financing for one. I think the industry needs to revive. And at the time of revival, one would definitely need support on working capital. That's the first thing that will require. One understands that the delay in opening up of flights, etc., international air travel has now been pushed back to 30th of November. One understands all of that. Those are precautions that one needs to take. But in order for the industry to be back on its feet, it would need easier financing. It would need support or incentives for the government, but these are not being planned well. Even the LCC concession that came out recently, doesn't really make sense, in the sense that one has to spend extraordinarily high amount of money in order to get a very, very small benefit. It doesn't work. I don't think these are being thought through at all. So I don't want to actually sound very negative, but I don't think there is clear thought. There's been a lot of thought given from the industry, but I don't think there is any clear thought from the government perspective.
So maybe I think it's opportunity for you. If you can keep it on mute, yeah. It's an opportunity for this particular industry through CII and other forums to sort of make representations to the government to ensure that there will be reforms which will help you to grow as well. So I'm just giving you a hint in terms of way forward. So thank you for that. Wade, my next question is to you, and it's nothing to do with this industry as such. It is more to do with the consumer, because I'm sure all of us are consumers of your industry as well. That given the fact that this particular diagnostic business has done well over the last 6-7 months, not just in the urban areas but also the rural areas, what kind of challenges you have faced in terms of managing this particular pressure, in terms of even getting the diagnostic representatives and the people who would be testing and giving the results at the end of the day to the people who have taken the tests, and how do you ensure the quality of those particular results are sacrosanct, and what are the measures being taken in order to improve that particular quality, given the fact that this is very, very important from a person's health perspective, the investigation perspective, and ultimately the results as well. So what are the steps taken by your industry on that to meet the demand?
I think, Kushu, very good question you are asking, and very, valid at this time, because, health is such a subject where people more worried about quality, and there are decisions which are based on this, at least now, because more or more treatment are happening on evidence based. So it is more important that diagnosis is properly done, and there is no ambiguity in that. Having said that, if you see our industry, 85% of industry is unorganized. Only 15% is in the hands of people like us who have organized branded players. And unfortunately, health is a state subject, and each state has their own, rules, regulations. Unfortunately, there is no regulation as such for any diagnostic company. You and me can tomorrow start a lab and start testing. So that's the way. It's very easy. But you're right. Something has to be done on account of where somebody is thinking about quality, not only the affordability only, or the accessibility is also a very big challenge in this industry. So as far as we are concerned, we are very, very, quality oriented, because we got accreditation from CAB, which is the highest body, which is College of American Pathology, and NABL is another body which is accrediting. But if you see, out of 100,000 labs roughly in India, only maybe 1,000 are accredited by NABL. So that's how the industry is pan out. Having said that, the government has now understood, because the overall healthcare spend, let's suppose 100 rupees spent on healthcare, only 5-6% is on diagnostic testing. And if they can control the quality and this, then they probably can save 95%. Because if your diagnostic is wrong, then you are spending unnecessarily on the treatment and so forth, on medicines, etc. So I think there is a thinking which is going within the ministry, within the healthcare department, or overall government machinery. And if you see during COVID, this has seen, because government has made such a stringent process and control. So there is an approval which is required from ICMR. There is a approval which is required from NABL, and there are stringent process control which they are keeping, so that the overall quality is to be maintained. And I think for COVID, they have approved about 150-200 labs in India who are just doing this, COVID testing. So they are ensuring. In fact, that's how the quality is to be ensured. But having said that, right now we are way, way behind. I mean, if I talk about other countries, we are very much behind in terms of quality, because this is problem where there is a accessibility which is not there. In fact, 30% population which is urban, they are getting this, testing facility players like us. But in rural, which is 70% population, there is nothing, which is right now. Even we don't have that much of penetration or accessibility in those areas, and none of the good institution has. It is very difficult to ensure the quality there. So I think it takes time, but good part now there is a thinking which is going, and government is also taking certain steps to improve overall quality.
So thank you for that perspective. I think the heads up over here to the industry is that there is a lot of scope for growth in the business in the urban area, rural areas, of course, given the fact that 70% of the population live there. And of course, not only to open up such pathology labs, etc., but also to have the right talent and the competent people in terms of diagnosis and in terms of giving the right results. So I think again it's the heads up for the industry. So thank you for that. Since now we have about maybe around 5 or 7 minutes or so before we go for the round of questions, maybe I would request starting with Jamin, a question for every panelist over here, starting with Jamin, in terms of how do you see the way forward, which you may have covered in your opening comment, but maybe specifically, and maybe a couple of asks as far as the reforms are concerned, as far as the tax is concerned, as far as anything to do with the legislation is concerned, in order to ensure that the industry or the sector you're operating is positively impacted. So over to you, Jamin. 1 minute download from everybody, please. That would be great. Thank you.
Sure. I think, as I said, some of these, if we can continue with some of these changes going forward, this would be good for us. I mean, I think the whole aspect of digitization and technology has got advanced because of this, not only at corporate end, but even the consumer end. So that is one of the better things. And if we can continue with some of the efficiency which we've got in here, the whole thing about work from home, I think nobody expected that to be so productive. At times, I believe that, I'm actually being more productive sitting here than going to office every day. So while that personal connect is important, but I think we'll have to draw a balance once we get back. And I'm pretty sure that, what is normal is a question mark. I don't know whether we'll really get back to normal as we saw pre-February. So one has to look at, and there is a lot of positiveness which people have learned in this 6 months. As far as the asks are concerned, I think a lot has been done. We also need to recognize that the government in India, unlike some of the other countries, has to look at the fisc and where is that going. So I think in the restricted context, they've done a reasonably good job. From the sector point of view, there's been one demand which has been made for tax, as you mentioned. There is a restriction on the tax benefit which a bank or a lending institution gets with respect to the provision which it makes on its doubtful assets. Now, considering these times, everybody has stepped up multiplier times in terms of the provision for doubtful assets, and that is going to be capped. So it will take years for us to take that benefit on tax, whereas the P&L will get will see that impact so soon enough. So that's been one request which has been made by the industry.
Thank you, Jamin. Can you hear me? Thank you so much, Jamin, for this. Over to you, Niranjan, in terms of your views about the way forward was the asks from the government.
I think the way forward, very simply, we all have to stay positive. We need to continue to navigate. There will be challenges. COVID has not gone away. We need to continue to ensure that we have one eye on growth and the other eye on cost and cash management. So it will be about trade-offs, and we'll have to continue to manage that way. As far as government is concerned, I would first say complete full on-time execution of all the programs that they have laid out, right? That is extremely essential, because still on-ground execution is not as much, whether it's MSME, whether it's other things, which the program has laid out, capital expenditure, job creation, whatever they've announced, complete execution of that is one. Second is selective GST rationalization, even as experiments, to see what happens. For instance, again, two-wheeler is classified in luxury and sin goods. Two-wheeler in India is a means of mass commuter and a low middle class kind of stuff. So, you have to experiment where there's not much of fisc that goes away, and one can see the result. And if it doesn't, then you reverse back. So I think some of these bold steps will need to be taken. That would be my take.
Thank you. Over to you, Vajra.
Thank you. I think we are right now focusing on COVID and the impact of that. But I think by and large, if I were to say in a VUCA world, what is that we should look at? Because today it is COVID, tomorrow it could be anything else. I think very important are the 4 A's in this kind of situation: accept, adopt quickly, and accelerate. I think all this with the 4th A, which is with a lot of agility, is the key to sort of moving on quickly and transitioning to the new way of life, whichever impact it has. One of the key ingredients for this again would be to ensure that we are lean, we are flexible, and we keep our overheads low. I think these are some of the key important aspects for that. Moving on to the expectations from the government, I think one expectation which I would have is we have been talking about Atmanirbharta in a big way. And one of the sectors which requires attention would be the edible oils. We import almost 70% of our edible oils today. And I think, it's not that we can stop importing and start producing these oils in the country, but definitely we need to create an environment which is conducive to promoting edible oil production in the country.
Thank you. Thank you, Vadraj. Debashish, since you mentioned that, there is not much currently expected from the government in terms of the travel and tourism, maybe my question will be different for you in terms of your wrapping up comments, that what is that one thing which maybe your organization or the industry would be wanting to do differently to see a remarkable change in terms of the growth?
Thanks, Kushal. Interesting that you talk about growth, because right now, the industry has come to a standstill. But I think in the longer run, if you look at the longer term future, which we all look at, we will need to focus. We need to focus on automation and technology in the and that's for not only for meeting the requirements of the future, but also to keep our cost structure lean, and also to keep our cost structure lean, also to get into the new range of customers that are coming. The other thing, obviously, we have to continue to be innovative in terms of products, for example. I have given you examples of what products, etc., that we are creating, which are different from what it was earlier. So we need to continue to do that. And while I know the government has not yet been very responsive, I think one of the things that it can do is at least remove the differentiation between the way travel, the way a traveler pays taxes when he's booking from India on a booking from Indian company, when he's booking directly on a booking.com. For example, if you book directly on a booking.com, you don't have to pay the TCS, the new TCS discount. Whereas if you book from a common scope or such other company, you need to pay a TCS. So this certainly puts one at a disadvantage. Why would I book from a common scope if I can avoid the tax collector so I can directly over?
That's right.
So those are the things that I think the level playing field is something that we need. At least if the government can't provide jobs, at least we can provide a level playing field for the people based out of India.
Absolutely. And I think maybe you can keep it on mute, please. Thank you. I think one particular point which I have always noticed, and this is my personal view, that the travel, the way the travel fares, etc., airfares, etc., at some points of time, I mean, a 3,000 rupees ticket goes to 18,000 rupees and 20,000 rupees. If at all that can be brought under control in some way or the other through a reform or a policy, it would really help tours and travels and other operators, including individuals, to have a much more boost on the personal side of travels as well, given the fact that, some of these costs really go up during the seasons and can be soaring the roof as well. So thank you for that. Ved, over to you in terms of your final comments, maybe a minute of final comments in terms of how do you see the way forward?
Thank you. So let me first start with positive. while government has done a lot of work through Ayushman Bharat, where many more people are covering under healthcare, that is good part. But still, in terms of accessibility and affordability, which is a major concern in India, there are certain things which from this forum I would like to mention, where most of the reagents which we consume is important, and that's where heavy custom duty and all that stuff. Second, the GST, which is exempt for us, but on all the input there is a GST, and we are asking a lot many times that if we have to become affordable, then this cost has to come down, and that is two way where we can bring this cost down. And third, which is last, is development of talent. We are facing huge shortage of doctors or technical staff, be it technician or flabo. So that is another thing which somebody has to think for this industry to provide as a quality and affordable services as a whole. Thank you.
Thank you, Ved. And I think in this particular 1 minute of wrap-ups, very important points came out, like, digitalization, technology. That is the kind of platform, I mean, whether banks or whether pathology labs or whether any particular business, I think technology is the future, no doubt. Staying positive, something which Niranjan mentioned, balancing growth and cost management is what also he mentioned, which is a very, very vital point as well. And I think, Vadaraj, from the perspective, the 4 A's which I'm very impressed upon is acceptability, accept, adopt, accelerate, and agility. I think it really sums up very well in terms of the difficult times that we all go through and the way forward as well. So once again, my sincere thanks to all of you panelists for a lovely perspective on your respective sectors. We have a couple of questions. And Jamin, the first question I think relates to you, if I can read out for the benefit of everybody. During the COVID times, banks have been raising money to meet the stress in the asset quality and improve the capital adequacy ratios. Do you think that the stress has been factored in the books, or still there can be surprises or big undetected risks in the books?
Jamin, you are on mute, please.
I'm sorry. So yes, capital raising was important because we talked earlier about moratoriums. Moratoriums are available for borrowers, but there was no moratorium for the lending institutions. So it had to fend for the liquidity themselves, and capital did play a part, of course, with respect to uncertainties around. If you have noticed the last few, March, June, and September, most of the lending institutions, banks in particular, have actually stepped up their provision requirements quite dramatically over a period of time, and compared to what they were doing earlier. And to that extent, in most of their judgments, I think there has been reasonably good recognition and provision. What it will play out, as I said, a lot of uncertainties around. One is around the disease. One is all how this whole thing plays out with respect to the moratoriums, restructuring, Supreme Court, all of that. And if there is a second wave or whatnot, when is the vaccine going to be available? When do we get back to normal? So there is still uncertainty, but in the judgment of most of the lenders, I think they have made a reasonably good provision over the last 2-3 quarters or so.
Thank you, Jamin. That was a very, very precise answer. Appreciate that. The second question is addressed to anybody, and I think I would request any one of you to pick it up. It's a question on capital account convertibility. The question is, could anyone give us an insight on the capital account convertibility? Is this something that the government could consider as a bold reform, and rightly so mentioned as a bold reform, as it would require a lot of structural changes? So any member from the panel would respond to that question, please. Jamin, would you want to take it up, or somebody else? Please take it up, Jamin.
Okay. Honestly, I'm not sure at this point of time. And whether at this point of time to do our full capital account convertibility is something which the government will have some liberalization of what is there possible, even though in terms of timing I'm not sure. But complete convertibility, at least I wouldn't expect that to come at this point of time.
No, absolutely. I think I would agree with you, but I would like to know from some other panelists as well, if at all they believe that maybe given their industry or given their understanding, if at all anybody feels contrary, happy to hear as well. So it doesn't look like, of course, I think I completely agree with you that at this point of time, it may be too early. So I think government has been talking about this for a fairly long time. I mean, for many years they've been talking about, but it's still not the right time as well. So once again, thank you very much, all of you, for sharing your perspectives. Maybe I can only say that this particular COVID-19 era, which is, according to me, not completely gone, because we have been hearing a lot of cases. It keeps evolving. Today, it's not much in Bombay, but it's there in other cities as well. And therefore, this is something that may remain, and we may have to live with it for a little longer period of time. But definitely, there is a lot of positivity now in the system, in the economy, in the way things are functioning. And organizations, although they would have declared that working from home and working from anywhere is, of course, a new normal, organizations are also thinking that what could be the best balance in terms of bringing people back to offices in a very safe manner, or otherwise having a proper accountability and responsibility from them in terms of working from home. Things are not going to be that very easy over the next few months. And of course, I am an auditor, and I've always told my people that let's be ready for one more round of the year-end audit season, which could be a virtual audit season as well. And same thing I can say for you all CFOs in terms of the financial reporting. But I've always been very optimistic, and I believe that definitely with the new learnings and with the new opportunities, this world is going to see a very different era going forward. So once again, my sincere thanks to all of you for being there on the panel this afternoon. Truly appreciate your time. And Vikas, I hand it over to you. Thank you very much.
Thank you, Kushru, and thank you all. It's been quite a learning experience for all of us. And what I wanted to share with you is that yesterday we had one panel on economy, where we can go from here. We had two senior economists in that panel, and there were a lot of questions, and those economists, and rightly so, were bit cautious in terms of predicting the growth, the GDP, and the recovery path. So there were talks about whether it is V or U or W or even K. But the listening to all of you CFOs across the sectors, like Niranjan mentioned that two-wheelers are back on track. Even the Maruti, the four-wheelers are also now on its feet. What we are reading is that tractor sales are also now, and there was this report from one of the rating agencies that next year it's going to be around 12% growth, which is expected in the tractor sales. So it's really a sort of positive sense which we are getting. And of course, from the banking perspective, what Jamin said, that banks are willing to lend, so the credit is there, of course, subject to the genuinity of the case and the security of the principal and the interest back. And of course, with Mr. Vadrajan in terms of the agri or the FMCG, where the consumption is picking up, demand is picking up. And of course, with the travel and tourism, where we are hopeful of this again getting back into the thing. So with all these positive notes, I think it's good that we are listening on a positive mode, and then good to close this CFO conclave with a positive note. So thank you all. Jamin, thank you. Kushu, thank you. Devashish, Niranjan, Mr. Vardarajan, and Ved, for your time and for your perspectives and support to CII. Thank you all. And with this, the CFO conclave comes to an end. Thank you very much.
Thank you. Thanks, Vikas, and thanks, Kushru, and thanks all fellow colleagues on the panel. Thank you.
Thank you.
Thank you all. Have a good weekend.
Thank you.
Okay.